Oh my gosh, the stock market is coming down crashing here again today. As of the time I'm recording this video, at March 12th, we're in the middle of the trading day and we have the Dow down more than 8.5%, with the S&P as well as the Nasdaq down more than 7.5%. Just earlier today, we already had a meltdown that halted the stock market for 15 minutes for the second time in just 2 weeks. So, what am I doing today? As someone who manages 2 six-figure portfolios for my family, stay tuned. Before this video starts, I just want to quickly say that I am not a certified financial advisor. So please don't take what I say as advice or just blindly follow what I do. Always do your own research. So I don't want to see comments in 6 months and be like, oh, what an idiot. We bought the stock that you bought and lost a ton of money. Of course that can happen. What I'm about to say should just be taken as what it is, which is just something said by another guy on the internet. In 6 months, we can totally be looking back at this moment, this day, and be like, that freaking idiot. The stocks he bought went down 20, 30, 40%. But you know what? That's what this channel is all about. I'm just trying to share my perspective, my strategy, as well as my mistakes with y'all, and hopefully provide some value that way. Let's get right into it. Just to provide an overall perspective, around a month before this market crash that we're currently in right now, I was about 75% to 80% invested across both of my accounts, which means that I have another 20% to 25% sitting in cash on the sideline. I have to admit that during the past month, I've bought a little too much, a little too early in the crash. More specifically, I was buying Carnival Corporation, ticker symbol CCL, and Wynn Resort, ticker symbol WYNN, right before the market really started to crash down, because at that point their valuation was already relatively low compared to the market. And currently I'm down about 40% for both of them, but I'm continuing to add shares as it drops lower. Now at this point in time, I only have around 10% of cash sitting in my account, which is definitely a little lower than what I would like it to be, consider how uncertain and volatile the market is right now. However, I'm glad that around 2 weeks ago, I actually put around 7 to 8% of my portfolio across 2 accounts into a short S&P 500 ETF, which means that as the market gets lower and lower and lower, this ETF goes up in the multiple of that. So if you're looking at today where the market is down 7%, 8%, that ETF is actually up around 21%, 22%, 25%. So this ETF ticker symbol SPXU is kind of my insurance policy in case the market keeps going down. And as the market keeps dropping lower, I can potentially start liquidating that and turning that into cash, which will be worth more than the time I bought in for. And I can use that more cash to buy into stocks at a lower price. However, that is a risky play that I wouldn't suggest anybody doing it, especially at this price where this ETF is priced pretty highly. If you don't already own anything that short the broad index or short the market specifically, I would say actually wait for a day where the market rallies huge and maybe see if it's the time to buy that. The biggest risk associating with getting to a short ETF like this is that if the market actually turn around and start to rally, I'm gonna lose money on that huge. Now, to keep in perspective, if you're someone that's just getting into the market or thinking about to start, or someone who has a ton of cash sitting on the side, you're in a way different position than I am in, where I'm already 80% into the market. So I will talk about that later in what I would do in that situation. What I do here today might not apply to your situation at all. For me today, it's all about disciplined buying, which means that I have to be very careful with not spending too much money and watch the cash level in my account, because if I buy too heavy and run out of cash and the market keeps dropping another 5, 10, 15, 20%, I will be out of cash to buy more shares at lower price. However, I'm already seeing attractive prices for companies that I like, that I want to take advantage in the opportunity today that are presented in the market. So the first thing I did, I went in, I bought Shopify. First thing I did, I went into the market and bought 3 companies that I weren't able to get into before, that I really like and finally seeing their price at a discount. The first thing I did was going and buying 3 companies that I wasn't really able to get in because of their high flying prices. The first one being Shopify, ticker symbol SHOP. At the market open this morning, it was down around 10%, and I was able to get in, buy a few shares, and actually right now it bounces back to be up 2% for the day. The reason for buying Shopify is that I actually been following this company. I really wanted to buy it for the past year, but the price just keeps going up and up. I never saw the dip that I was able to get in actually. In my opinion, even though every company is getting dragged down by the market, an e-commerce company like Shopify that has so much growth potential and momentum is not really going to be destroyed by this virus situation. People are still going to shop online continuously, especially for the long term once they get past this short term stress, that they can continue to grow for years. So I'm really liking the price I'm getting at $370 for Shopify long term. The second company I bought in is Lululemon, ticker symbol LULU. Of course, this is a company that can potentially be hurt severely in the short term by people not going out to stores, not spending money. But still, I think it is such a fantastic company and fantastic product in the sector that is seeing a long-term growth trend as leisure, as people getting more and more comfortable wearing yoga pants and athletic wears into casual settings, or even, going out sometimes. And by far, Lululemon is the best run player in the sector and is the face of the sector. It's just like Apple for smartphones. If you think about athleisure and high-end athletic wear, Lululemon is the first that came to mind. I know all the fitness junkies out there have the brands that they like, but for new people that are just getting into athleisure, to be frank, Lululemon is the easy choice and the lazy choice to make because they're just the most obvious brand to go with. The third position I get into new today is Delta Airlines, ticker symbol DAL. I mean, this is a stock that in the near term is getting destroyed, which is somewhat justified because in the short term, their business is going to get hurt severely. There's no doubt about that. But among the airline industry, they actually have one of the best balance sheets and cash position, as well as valuation. So I'm really going with that instead of any other players in the airline. Even though you see American Airlines dropping way bigger percentage points than Delta and Southwest, that is because American actually has the worst balance sheet and worst cash positions, which means that if this industry is getting into some trouble, they're the first one to went down. So I'd rather bet on a safe player with more cash and better balance sheet. Now, going back to companies that already had a position built up, like Carnival and Wynn, that also went down huge. I always wanted to buy more, even if I only can afford a little, to always buy more at a lower level, just so that in case the market bounced back 10-20%, I'm able to trim my position then, knowing that I bought at a lower level and still not feel like I'm taking a huge loss at that point. Therefore, I actually went on to add around 5-10% more of my existing position to both Wynn Resort and CCL. Now, for the stocks that I'm really excited about today are the companies that I already own and liked, but like to actually build up a bigger position and can afford to do so. And these are Tesla and Square. For the past few weeks, I've actually been saying to myself that if Tesla drops below 600, I'm gonna start buying again. And if it drops below 500, I'm gonna start buying a lot more. And if somehow it drops below 400, which I really don't see happening that soon, I'm gonna pretty much buy as much as I can. Really start buying huge into Tesla if it's dropped below 400. So today I was able to scoop up some shares at $570, which I'm very happy about. But also I'm only adding around 5% to my existing position in Tesla. Therefore, I can afford to add a lot more in case it drops lower. Now for Square, it's actually a company that I've been invested in since 2017. I love this company to death, especially to the long term. They are a payment processor company that process a lot of restaurants, food truck, and small business transactions. But actually the piece of Square that I really like is their Cash App. I mean, it's nothing short of incredible from what we've seen in the last 2 years with Cash App. They came out of nowhere, and with such aggressive customer acquisition and superb execution, they were able to take shares away from Venmo, surpassing Venmo in monthly active user right now. And I'm really loving all the incentives, discounts, and ways for people to bring people into the platform and have them actually use the platform not only for peer-to-peer transaction, but also for actually spending money in physical locations. And I would say that this is the closest thing I can see becoming the WeChat Pay or Alipay of the US. And it's just ridiculous that Cash App even has portals for you to buy Bitcoin and stocks directly in the app, which means that they can even potentially disrupt the disruptors like Robinhood and Coinbase, really becoming the all-in-one platform for digital finance going into the future. So I'm really glad that Square stock is finally seeing some drops and I'm able to start buying again. However, I think because it's an unprofitable company, flying at a pretty high valuation, it definitely can drop down more. So I'm definitely ready to scoop up more shares if it did break below $50 a share. As I'm recording this video, I actually just bought new positions in 2 new stocks. And the first one being Facebook. To be honest, I'm not proud of it. I freaking hate Facebook as a company and I don't think they're good for society. But you know what? Every time this company drops below 160, I think it's a steal. It still has such a strong moat in digital advertising and they're by far the most dominant player in monetizable social media that if you're getting at this price, why not? It's basically free money in the long term. And the second company being Zoom. Now, I really hesitated because you're definitely buying this company at a huge premium, but from what I'm seeing right now, every school and every company is getting ready to really go on shutdown and encourage students and employees to work and study from home. There's actually an argument to be made that once these institutions that tried working from home or virtual classroom, they actually find out it's more effective and better than they thought before. And the situation we're going through right now might actually have long-lasting impacts on how business and schools organize. So I think if you're not already invested in Zoom and the lower price, ticker symbol ZN, it's definitely a great stock to own for the next 6 to 12 months and even long term, considering that they're the company that potentially benefits the most from the situation we're going through right now. Well, that's all the buying I did today. Going back to those of you who are interested in investing but maybe never tried, here's what I would do in your situation. I actually think that this is one of the best times to get into the stock market right now, the year we're about to see. Now, I'm not a fortune teller, and I don't actually think anybody can tell the fortune by predicting if the market is going to drop another 20% or 30% in the next 3 to 6 months, or it will recover. Who knows? I'm never someone that claims I can call the bottom in the market. That's why I buy it on the way down. Get into the market right now, you're actually getting in at a much better deal than the past 2 or 3 years. And the biggest bonus, I think, is the fact that you're in a market that you will experience volatility. You will experience psychological bounces and fear in the market. And that's a great time to really learn and take some lessons. You actually rather learn at a point that when you're young and doesn't have that much to lose. I mean, really, if you started in a bull market where everything just goes up and up and up, an idiot can make money by just throwing darts on the wall. At the end of the day, they never really learned that much. And if you're someone that's starting right now, I would definitely say keep it simple. Focus on the companies of the highest quality that you can find. I mean, we're talking about Apple, Amazon, Microsoft, Visa. These companies that's been around forever and have huge balance sheets that can definitely weather the storm, whether this situation goes on for another 6 months, 12 months, a year or two. They will definitely come out on top and be thriving again. I mean, these are really companies that in the long term just goes up and up. So when at a time that you can get them at a discount without really that much risk of them going out of business, you can be confident to keep buying more and more and more if they keep dropping lower. And if you're really feeling risky, I would say you can maybe even focus on Tesla if you understand the space, or Square. Companies like these where have long-term growth potential, but definitely in the short term, their stock price can be hit huge potentially. Especially if you're young. I mean, just graduating high school, in college, or in your 20s. You don't have to even start with that much. Just set up an automated deposit with your broker of like 15 to 20% of your monthly income. That way, if the market continues to drop, you have more cash coming in to buy more and more at a lower price, at a better deal, average the cost that minimizes any timing risk of the market. And one day, we will all be on the other side of this, and you will be glad that you bought all these great companies at a discount and made a huge return on your investment. If you want to get set up with a brokerage account right now, use my referral link down below to get 2 free stocks when you register with WEBULL. If you enjoyed this video, please smash that like button, subscribe, and comment down below what did you buy and sell in the stock market today, as well as what do you want to see next in one of my videos. See you in the next one.